There are over 160 central banks in the world, and while their role has changed over the years, primarily their duties include implementing a monetary policy that provides employment, currency stability and controlled inflation. Their aim is a so-called Goldilocks economy, not too hot, not too cold. They do this through managing interest rates, setting the reserve requirement and acting as the lender of last resort to the banking sector. Other responsibilities include controlling the nation's entire money supply and managing the country's foreign exchange and gold reserves and the government stock register. They raise rates to slow growth and lower inflation. They lower rates to boost growth. But when interest rates are at almost zero, central banks need to adopt different tactics, such as pumping money directly into the financial system. This process is known as quantitative easing, or QE. Quite simply, using money they've printed, they buy bonds, increasing the amount of money in the financial system. This then encourages financial institutions to lend more, allowing businesses and consumers to spend more, boosting the economy. After the financial crisis of 2007 to 2008, central bankers led change. But as of 2015, their ability to boost economic growth has stalled. And that's led many to question the role of the central bank. Andrew Haldane from the Bank of England says central bankers may need to accept that their good old days of adjusting interest rates to boost employment or contain inflation may be gone for good. Economist Willem Buite argues that central banks have become the custodians of stability for financial markets, a role for which they lack both democratic accountability and political legitimacy. And Mohammed El Arian says, "We are rapidly nearing an inflection point where central banks will find their policy approach increasingly and consequentially ineffective." For now, though, they remain the entity responsible for overseeing the monetary system for a nation, or in the ECB's case, a group of nations.